Wouldn't it be great to invest once and never look back, knowing your money is working for you day after day, year after year? Investing in stocks can feel like a roller coaster, ups, downs, and constant changes. But what if you can find a handful of stocks that you could hold on to for the long run without needing to worry about short term market swings? That's exactly what we're talking about today. In this video, I'll be revealing 6 stocks that aren't just solid investments for now, but stocks that you can buy and hold for the rest of your life. These companies have stood the test of time, weathered market storms, and are positioned to continue growing for years to come. If you're looking to build a strong, stable portfolio that can grow quietly in the background while you focus on other things, you're in the right place. Let's get started by unveiling these 6 buy and hold forever stocks. Chapter 1: Microsoft, or MSFT. Let's start with Microsoft, one of the biggest names in tech, and for good reason. Microsoft isn't just a company, it's a powerhouse with its hands in multiple industries. From cloud computing to gaming, software to artificial intelligence, Microsoft has built a business model that's hard to beat. Why is this important for long-term investors? Simple. Microsoft's revenue comes from many different areas, which makes it more stable and less reliant on any one trend. Over the past 5 years, its stock has grown by over 200%, proving that it's a solid performer in both good and bad times. One of Microsoft's big strengths is its investment in AI. They've partnered with OpenAI, the creators of ChatGPT, which puts them ahead of the curve as AI continues to expand. Add in their strong cloud services business, and Microsoft has a long runway for growth. Financially, Microsoft is a cash machine. In the past decade, their free cash flow has skyrocketed to $75 billion, easily covering the $20 billion they paid in dividends last year. And they've raised their dividend for nearly 20 years, showing a commitment to rewarding shareholders. With a global reach, steady cash flow, and smart investments in future technologies, Microsoft is not just a stock for today, it's a stock you can hold on to for decades. Chapter 2: Visa, or V. Next up is Visa, the world's largest payment processor. Whether you're swiping your card at a store or buying something online, chances are Visa is behind the transaction. This company is a true global leader, operating in over 200 countries, which makes it a solid choice for long-term investors. What makes Visa stand out is its ability to generate massive amounts of free cash flow. Over the last decade, Visa's free cash flow has grown from around $5 billion to nearly $20 billion. This financial strength allows Visa to pay out dividends consistently while continuing to grow its business. Now, Visa may not offer the highest dividend yield. It's currently under 1%, but that's because the company is growing so fast. What's impressive is its 16% dividend growth rate over the past 5 years, which shows its commitment to rewarding investors long-term. One thing to keep in mind is the ongoing lawsuit from the Department of Justice accusing Visa of monopolizing the debit card market. While this has made headlines, most analysts believe it won't be a major long-term impact on the company's success. Visa has weathered similar storms before, and its dominant market position remains strong. With its vast global network, strong cash flow, and steady growth, Visa is a stock you can confidently hold for the long haul. Chapter 3: Berkshire Hathaway, or BRKB. Moving on, we have Berkshire Hathaway, a company unlike any other. This massive conglomerate, led by legendary investor Warren Buffett, owns businesses in a wide range of industries: insurance, railroads, energy, consumer goods, and more. This level of diversification makes Berkshire one of the most stable and reliable companies for long-term investors. What makes Berkshire truly unique is its dual income streams. It not only owns fully operational businesses like Geico and Burlington Northern Railroad, but it also holds a large portfolio of public stocks, including giants like Apple and Bank of America. This combination of steady cash flow from its businesses and the growth potential of its stock investments creates a strong financial foundation. Berkshire is also known for its enormous cash reserves. The company currently holds nearly $300 billion in cash. This cash pile gives them the flexibility to make strategic acquisitions or investments during market downturns, allowing Berkshire to grow even when others struggle. One of the reasons Berkshire is considered a buy and hold forever stock is its ability to adapt and grow through smart management. Warren Buffett and Charlie Munger have built a fortress-like business model that's designed to survive and thrive no matter what happens in the broader market. With its diversified businesses, strong leadership, and enormous financial resources, Berkshire Hathaway is a cornerstone stock for any long-term portfolio. Chapter 4: Johnson & Johnson, J&J. Now, let's talk about Johnson & Johnson, a company that has been a pillar in the healthcare industry for over a century. J&J is a global leader in pharmaceuticals, medical devices, and consumer health products, making it a well-diversified and stable investment. One of J&J's most impressive achievements is its track record of paying and growing dividends for 61 consecutive years. This makes it one of the most reliable dividend stocks on the market, a true gem for long-term investors who value stability. With a current dividend yield of 2.8%, J&J continues to reward its shareholders while maintaining a solid balance sheet. Recently, the company spun off its consumer health division, creating a new entity called Kenvue. This move allows J&J to focus more on its pharmaceutical and medical device businesses, which are expected to drive its future growth. Despite some legal challenges in recent years, Johnson & Johnson's core business remains strong, and its ability to innovate and adapt in the healthcare space keeps it ahead of the curve. Financially, J&J generates over $20 billion in free cash flow annually, ensuring it has the resources to continue paying dividends and investing in new opportunities. With its long history, global reach, and commitment to shareholder returns, Johnson & Johnson is a stock that can be definitely held for decades. Chapter 5: Costco, or COST. Next on our list is Costco, a company that has mastered the art of delivering value to its customers while generating consistent returns for its shareholders. Unlike most retailers, Costco doesn't rely solely on selling goods for profit. Instead, its membership-based model provides a steady, reliable stream of income that supports its operations. Costco's unique approach is what sets it apart. By focusing on bulk sales and offering the lowest possible prices, Costco creates loyalty among its customers, ensuring they keep renewing their memberships year after year. This membership income helps smooth out the ups and downs of the retail business, making Costco more resilient during tough economic times. Another reason Costco is a great buy and hold stock is its efficiency. Costco operates with very low margins, sharing the benefits with customers rather than focusing on maximizing profits from each sale. Yet, despite these low margins, the company generates a large amount of free cash flow. This allows Costco to invest in its business, expand into new markets, and reward shareholders with steady growth. With its focus on delivering value, a business model that's hard to replicate, and consistent free cash flow, Costco is a stock that can weather any storm. Whether in good times or bad, Costco remains a solid choice for long-term investors. Chapter 6: Prologis, or PLD. Last but not least, we have Prologis, a leader in the world of industrial real estate. As e-commerce continues to grow, so does the demand for warehouses and distribution centers. And Prologis is right at the center of it all. With a global portfolio of logistics facilities, Prologis benefits from the steady rise in online shopping, as companies need more space to store and ship their products. Prologis isn't just riding a trend, it's well positioned for long-term growth. E-commerce now makes up about 20% of retail sales in the US, and even more in Europe. And that number is expected to rise. This means that Prologis tenants, including major players like Amazon, will continue to rely on its facilities to keep up with demand. Financially, Prologis is in great shape. Over the last decade, its free cash flow has grown from $1 billion to over $5 billion. This strong cash flow supports a growing dividend, which is rare for real estate companies, making Prologis even more attractive to long-term investors. The key to successful investing isn't about jumping in and out of the market. It's about finding companies with long-term potential and holding onto them. These 6 stocks have the foundation to keep growing and rewarding their shareholders for decades to come. So, if you're looking to build a portfolio that grows quietly in the background, these stocks are worth considering. Thanks for watching, and be sure to do your own research before making any investment decisions.